What's happening, traders? What's good? And welcome back to my YouTube channel. This video, I'll be taking you guys and I'll be showing you guys what I'm expecting for the US dollars, that's DXY, and also on AUDUSD. So stick around. Let's start with the DXY. Now, most of you that know me or that are on the channel, on the Telegram channel, the free Telegram channel, know that I've been giving out DXY, and I love doing my analysis, bulk of my analysis on the DXY. So the DXY is basically used to measure the strength of the US dollar. So that's why I use the DXY chart, because when you determine the trend and the strength of DXY, you can literally use that to have an easy explanation on the other pairs. You get me? EURUSD has a correlation, opposite correlation with DXY. If DXY is bullish, EURUSD is definitely going to be bearish. So that's why I always start with DXY, because all the pairs that I'm trading is being linked up with DXY at some point. That's the US dollars. I basically don't trade DXY. I don't open a trade on DXY, but I use it as an indicator to get me to other pairs. Now, this is the weekly chart on DXY, and in here we're expecting this lows. We're expecting these lows to be run on DXY. This is the weekly time frame. So we're expecting these lows to be run on DXY during this week, this bearish week. We're expecting these lows to get violated. But as you can see, it took 2 weeks thereabout. It came around the low. It came around the low, formed an equal low here. If you can see that candlestick, it literally came in, formed an equal low, engineering more liquidity in the marketplace. And then, as you can see, price basically took that out with this week's candle. You can see. So what happens when liquidity has been taken? Definitely, when sell side liquidity has been taken, you want to see price navigating towards buy side liquidity or an imbalance, a fair value gap in price. You get me? You want to see price navigating towards the opposite PD arrays. So now that price has literally grabbed liquidity and tapped into a weekly fair value gap here. So for it to, this is a weekly fair value gap. Let me zoom that in. I don't have my annotations on the chart right now. So this candles high here. Let me change this to this candles high here, and this candles low. Yeah. So this candles high and this candles low. This the gap in between, the space in between the middle candle, that is what we call the fair value gap. So why I'm actually favoring this fair value gap, or I may want price to push higher from this fair value gap, is because of this liquidity that was resting below the fair value gap. So there was a lot of liquidity resting below this low, and then this fair value gap was just below it. So price could use that PD array, that point of interest, to just we may see price continue to push higher, or maybe this might just be a beginning of a new trend for USD, continue to push higher into important PD arrays. Now we have this high here. This is a buy side liquidity here. This is the buy side liquidity here. So we can be expecting DXY to navigate towards that. Now remember, I told you guys on the channel that these levels act as magnets to price. Like, look at these price levels like magnets, where you would keep a magnet and you just try to pass it to a place where you have loads of nails or irons. You would see that it's definitely going to get attracted to the magnet. You understand me? So these levels, liquidity areas like this, fair value gaps, PD arrays, act as magnets, most especially liquidity pool and imbalance in price. Imbalance in price like this space here, this imbalance in price, they do tend to act like magnets, drawing price to them. This is how you understand your buyers. You try to look out for these pools of liquidity, you try to look out for areas of imbalances like this. You can see this was an imbalance in here. This was an imbalance in here. So that will definitely let you know that price will be attracted to it. So it has completely filled this up, and it's not showing any willingness to to come down from that fair value gap. So you see price, the next point that I'll be considering would be 50% of this week will be somewhere here. Consequent encroachment of that week will be somewhere there, and then this highs. So this is my directional bias for DXY. It's gonna be bullish into this level. Now when I mean that it's bullish, I'm just saying it's gonna get drawn to these areas. So when it gets drawn to this area, you want to be scaling to the lower time frame to start looking for your entries or for specific things to happen. So once you understand the draw on liquidity on the weekly time frame, I'm expecting this week's candle to draw towards these areas. And also we also have liquidity resting above previous week's high candle and previous week's low, and then we have a fair value gap in here. Do you get? So price might want to come in lower, maybe grab this week's high, because for price to go lower it needs to grab a high first. For price to come lower into this fair value gap, maybe use this fair value gap as support level to push price higher. We might see price grab previous week high. There must be a grab first, then drop, tap into this fair value gap, and then if this fair value gap should act as support and start pushing higher, then we'll tend to take out the high that will be formed here. And also I'll be looking at price drawing into this level and the midpoint of this week. You get me? So this is my analysis on DXY. The long term could be to see price just clear out liquidity here, liquidity here, liquidity here. So draw towards this huge imbalance, this huge void. So price will just draw through this huge void from here to here. Some of you might be drawing from here to here. Okay, that's cool, that's perfect. But this week here offered buy side and also offered sell side. Remember, imbalance in price is when price doesn't give a chance for the market to offer both buy side and sell side. But in here this week offered both buy side and sell side. You understand me? Thereby covering this gap. So here is efficient, but from here to here is basically inefficient. You understand me? So this will be the imbalance in price at some point. So price will long term get drawn to that level. Remember, that's where the market maker tend to push price to. So yeah, this is the analysis for DXY. So I'm bullish on DXY. That doesn't necessarily mean I want to start seeing this bullishness being clear. Remember, I said something that I could give you a direction like this, but the market makers will try to bring price lower, tricking more people into thinking that they are going to sell and then push price higher then later. You need to understand your lower time frame for you to follow up on these buyers. You need to sync up your lower time frame in accordance to this buy. You need to look at what your lower time frame is doing in order for you to understand these buyers. Now I'm going to put on the chart work. Yep, so this is it. This is basically in drawing. I really don't need much thing on my chart. This is why I like trading ICH concepts. You really don't need much, and I just did that analysis with a naked chart. I didn't need any of these things. That's to show you that I can basically run my analysis just looking at the chart. I don't really need any of these things on the chart. But as a beginner, you would want to have all these things on your chart so that you would train your eyes to basically see these things. You get me? So in a nutshell, if I want to represent what I just explained to you guys with an annotation on the chart, this is how it's going to look like. So price is coming from that weekly fair value gap, and just grab this liquidity that was resting here. It took that out, tapped into the fair value gap, and then price pushed higher. So you can look at this as our setup pattern on the higher time frame. Price is fractal. So this is the first storyline: liquidity grab, huge displacement, breaking market structure, and then leaving behind a fair value gap. So you want to see price come back into this fair value gap, then take your longs to target all this liquidity. So, but before price might want to come into this fair value gap, this high might be grabbed, the weekly high might be grabbed, then price drops lower, tap into the fair value gap at some point. So this is like what I'm seeing. This is what I'm expecting. I'm not trying to predict what the market is going to do. I'm just following what I'm seeing on the chart. That's just what I'm doing. You get? If I'm going to add here, I'm going to add some annotations there. Previous week high, and then I will add here previous week's low. So yeah, so this is what I'm expecting on DXY. So yeah, this is a daily chart on DXY. You can see this is that weekly high, and this is the previous week high, and this is the previous week low. Now what am I seeing here? What I'm basically seeing here is I can see a fair value gap in here, this huge candlestick here, this space. This is BC, buy side imbalance, sell side inefficiency. So that's the classification of that fair value gap. It's classified into BC, buy side imbalance, sell side inefficiency. So this is what I'm seeing in price. And also this level here is a volume imbalance. This is a volume imbalance. And also this bearish candlestick that grabbed liquidity is my bearish order block. So a bearish order block is more valid to me, in my own opinion, when it grabs liquidity. Do you get me? So this is what I'm seeing on the naked chart right now on DXY. This is what I'm basically seeing. Do you get me? So you can see that price had dipped into that fair value gap. You can see price dipped into that fair value gap in here. So we had price drop lower into the fair value gap, and then we might see price use that. You get me? We might see price use that to grab the previous week high. Remember, I wanted to see price grab this high, then drive lower, tap into the weekly fair value gap, and then move higher. So this week, the weekly fair value gap, if being transposed into the daily time frame, is in alignment with all these PD arrays. You would see that this area here alone has a high probability of sending price higher, because we'll be having a whole lot of people waiting here. Maybe people that are trading fair value gaps, they will be in here. Their orders will be stacked in. People that trade volume imbalance, their orders will be stacked in. People that trade order blocks, their order will be stacked in. People that trade breakout blocks, their order will be stacked in. So we have a whole lot of PD arrays in here that will help push price higher to take out these highs here. So that's what I'm seeing on the chart in here. Now this is the annotations. Obviously I would love to put in some more annotation to what I didn't want to put in all those annotations, just not to get the chart messy. You get what I'm saying? So that's why I'm saying them out. But you would want to put that out on your chart. You want to mark out this breakout block. This breakout block in here, as you can see, aligns perfectly. This is the weekly fair value gap that I marked out. Go back to the video and you'll see that this is the weekly fair value gap that I marked out. This weekly fair value gap. This is the high end of that fair value gap, and this was somewhere here the low end of the fair value gap. So this is basically liquidity. Previous week, this was previous week's low. So this level, all these levels here, we have things, we have liquidity pool also in this level, around this level. So this level holds a whole lot of point of interest PD arrays. Do you get? So one price to grab this previous week high, then maybe tap into some sort of other block here, and then drop lower to grab the previous week high, tap into this, make some accumulations in here, and then send price higher to grab this overall high that I'm expecting on the weekly time frame. So this is my kind of long term, I think, because these are daily candles and weekly analysis. It takes a whole lot of time to print, but this is just what I'm expecting in price. So price might just come around here the first day, second day, without grabbing this previous week high. I just don't want you to get tricked, because that's just like a trick of the market makers. Don't get tricked. Just keep the higher time frame perspective in mind also, and don't allow the noise on the lower time frame to distract you. You understand me? Don't allow the noise on the lower time frame to distract you. Let me show you what I mean. If you go back to the weekly time frame, you could see that we were expecting these lows to be grabbed, but you could see that didn't happen for 2 weeks. It didn't happen. This is a weekly candle. It didn't happen. 2 weeks we had just consolidation up, like moving up, moving down, moving up. Like this was just 2 weeks of chaos before price literally grabbed liquidity using the other week, the third week's candlestick. You understand me? So price might just behave certain ways close to liquidity pools or point of interest like this, tricking you to think that price is not going to grab or price is going to go higher. So the market makers, what they are basically doing is they are creating more liquidity to take out. They are creating more liquidities, engineering more liquidities, and sending more order into the market so that they can take that out. So when I talk about a particular level being reached, you might see certain things happen. So me saying I'm expecting here to be reached, you might see price today, tomorrow, just, you understand. And factoring in the fact of that this week we have a whole lot of news. We have CPI tomorrow, so I think the news is going to help meet up this thing. So the news tells us when to trade, and the price action here tells us where to trade. So it's like blending in the whole thing. The news is considered, in my own opinion, the time factor here, because it tells me when to trade, and the time of the news tells me when to trade. Some news, not all news. You want to stay away from news like NFP and FOMC. You get me? So price will get to this level one way or the other. Price will get, this is the draw on liquidity right now. This is the liquidity area. So a lot of orders have been stacked here. So price is going to pierce through this liquidity. So what if price pierces through and keeps going higher? Then we will expect this level, this target to be met. We'll look for PDR raise to meet up with these levels. Now, how do I factor in all these things? I use a 20 days trading range. So from this candle, this is a daily candle, back 20 days, I look for PDR raise in those days. So that's why I'm really confident of these levels in here. So if I start from here and then I move this, so yeah, so from this candle down to this candle is a 20-day range. So I try to look for PDR raise in that range. So what are the PDR raise I'm seeing? Basically exactly what I showed you: volume imbalance, order block, breaker block, fair value gap, liquidity. So I factor that in the highs. So this will be my range that I'm looking to trade the market from. You get me? So this adds another confluence to the analysis. Let's head over to the fundamentals. I think I will not be doing the GBPUSD and the EURUSD analysis, but from the little one I've done with the DXY, you're supposed to navigate the rest of your pairs. This is all New York time. You get, this is all New York time. So this is like 8 a.m. Nigerian time. So this New York time, and this is like 2:30 Nigerian time. So all this is literally telling us when to trade, and then the price analysis, the price level that we have marked out on the chart, we'll just wait for time to be in alignment with price. You understand me? So CPI tomorrow, and we have another news 8:30 on Wednesday. We have another news. So this 8:30 on Wednesday. So this week is going to be juicy if you know how to go about the market. So you don't try to force things. You just try to follow what the market is showing you. You get me? So in my analysis, I may be wrong. So I'm open to being wrong in my analysis. So that gives me an open mind to staying neutral at some point and then engaging in different opportunities that I might be seeing in the marketplace. So my analysis is basically just to narrow my focus and eliminate most of my trades, to cut down most of my trades, and to give me a more precise entry. But if I want to remain neutral and just trade without a bias, it's very, very possible for me to trade without a bias. I just need to just stay on the 15-minute time frame and then look for liquidity runs, and then I take my trades in there with proper risk management. I still come out making money in the market, being profitable. So, but having a bias literally helps me become more precise and filter out other lower probability trades. You get what I'm saying? So yeah, this is just the essence for the direction. The direction to me is not really that important. Get me? So you can basically trade without a bias. All you need is just go to the lower time frame, or go to in the time frame you're trading and wait for a liquidity run, displacement, fair value gap, and then you take on your trade. The only problem that we have here, we'll have these things happen in different places, and we want to always get engaged with the highest probability setup. So this is it for the analysis, and hopefully I did justice to the analysis. So if you've not subscribed, please make sure you hit the subscribe button, and also like this video. You know, I'm starting out just to help the algorithm get my content to reach out to more people. But just be it. If you've not joined my Telegram channel, on my Telegram channel I do a follow-up of this thing. So during the week things might change, so I do a follow-up on the week, and I also send in directional what it is I'm looking out for currently. So If you love to understand, to have a follow-up of this analysis, click on the link on the description box. You would see a link to my Telegram channel, and then you just join the channel from there. So until I speak with you guys next week, or maybe during the week, who knows, see you guys.